All right, welcome back inside our proactive newsroom. And joining me now is Jeff Sapersky. He's the CEO of Chesapeake Financial Shares. And Jeff, it's great to have you back again. How are you?
Nice. It's nice to be back, Steve. Thanks for having me.
Yeah, so the company out with your Q2 earnings for 2024, and I guess a way to describe it is holding steady, and there's been some positives and also some challenges as well. How do you see the numbers?
Yeah, we're really pleased with those numbers, Steve. We're 2 years in to an inverted yield curve, which is the longest that there's ever been. And so it's a very difficult banking environment with that going on. So we're really pleased with our slightly north of $3 million number for the second quarter. It's roughly level with last year, and that's we're definitely holding our own. We're doing great.
Absolutely. And where did you see the biggest parts of being able to sustain what you brought back last year?
Yeah, the biggest thing I think, Steve, is our cost of funds. Cost of funds has been going up for all banks across the country for the last 2 years, but ours has started to level off, and so we're starting to pick up money back on our net interest margin again, which is very good. We've been swimming upstream against the net interest margin for the last 24 months, so it's nice to see that starting to abate somewhat and hopefully turn around. That's what we've been living for. So that's what we're counting on right now. So that's probably the biggest change that we've seen.
Yeah, obviously you're dependent on what goes on in the economy as well when you run a bank. And so where do you see things at right now? Obviously you're getting a little bit of help with interest rates, but where you see sort of heading in the right directions and some signs and some positivity?
We do. We've had steady loan demand. We still have solid loan demand. It's slowed somewhat from a year ago, but it's still a lot more solid than I would expect it to be when you have prime at 8.5%. So we're getting our fair share of those lending requests, and there's still quality loans. Our non-performance are at historic lows. We're still becoming the beneficiary of consolidation going on around us, both big banks and small banks. So I think people are maybe getting a little fed up with the disquietude that consolidation brings to them as customers, and so they
Mhm.
come to us. They're looking for stability. Our marketing campaign now is where stability meets community, and we're just trying to get across to customers and investors that we've been in the top 200, now top 100 bank for 17 consecutive years based on return on equity. Or next year we'll be celebrating our 125th anniversary of the bank. So all the stability boxes are checked for us. We just try to get that message out.
Yeah. And you were offering a dividend again. This is a 31-year consecutive dividend, which is really impressive for a bank.
It is, that's if you go back to 31 years, that takes you back through, the recession of 99, 2000, that takes you back to 08, 09, it takes you back through the pandemic. So there's been a fair amount of tribulation in that 31 years. And I think that's just a testament to the stability and why we think it's important to have a steady dividend for our shareholders.
Absolutely. Well, Jeff, thanks very much for the time. Really appreciate it. I won't wish you happy birthday on the 125 till next year. I know you weren't there 125 years ago,
I
but
was
we'll do
not.
this. Yeah, we'll do this next year. We'll talk about that for sure. So, congratulations on the numbers. I know it's been a challenging time in the banking industry, but it sounds like things are looking brighter, which is always a positive. So, really appreciate your time.
Great. Thanks a lot, Steve. I appreciate it. Have a great day.
You as well. Jeff Sapersky, the CEO of Chesapeake Financial Shares.